In this video, we'll discuss the requirements and calculation for self-employment income as a sole trader, partner, or franchise in relation to the UK spouse and partner visa financial requirement. As an OISC-regulated UK immigration law firm that has helped more than 4,000 partners with their UK partner visa applications, we're very well placed to discuss this. This video will be relevant for applications where the sponsor does not receive one of these permitted benefits. As we discuss in our detailed UK spouse visa requirements video, if the sponsor does receive one of these benefits, the adequate maintenance test applies, which is a much lower standard that must instead be met. If the sponsor does receive one of these, we have a detailed step-by-step guide for the adequate maintenance tests on our website, www.migrate.org.uk. The first requirement is that the person must be self-employed as a sole trader, partner, or franchise. If the person owns a UK limited company, that income is ordinarily treated as specified limited company income, assuming there are not more than 4 other persons that hold the remaining shares. The second requirement is that 1 financial year must have passed since the person became self-employed. This is because, as we will discuss later, you'll need to provide documentation relating to the most recent full financial year that passed, which in the UK is from 6th of April to 5th of April. Thirdly, there must be ongoing self-employment when the application is submitted. This will need to be evidence in the form of a bank statement dated no more than 3 months before applying showing transactions relating to ongoing trading, or evidence dated no more than 3 months before applying of the renewal of a license to trade or of ongoing payment of business rates, business-related insurance premiums, employer national insurance contributions, or franchise payments to the parent company. Fourthly, applicants can include their self-employment income if they're in the UK and are working legally. The implication is that for out-of-country applications, applicants cannot include their self-employment income towards the financial requirement, regardless of how much they earn. Finally, the immigration rules makes a distinction between those who are self-employed in the UK when the application is submitted, and those who are self-employed overseas and will be returning to the UK with the applicant to work. For those self-employed overseas who will be returning to the UK with the applicant to work, will need to provide evidence that 1. That their self-employment income is ongoing and will be continuing in the UK, or 2. A confirmed job offer of salaried or non-salaried employment in the UK starting within 3 months of their return. Let's now discuss how to calculate self-employment income. The first step is to identify the most recent financial year that passed. For those self-employed in the UK, this will be the most recent 6th to 5th of April self-assessment tax return period that passed. For example, if the application is submitted on the 4th of April 2024, just before the financial year ends, the relevant period will be from the 6th of April 2022 to the 5th of April 2023. On the other hand, if you apply on the 6th of April 2024, just after the financial year ends, the relevant financial period will be the 6th of April 2023 to the 5th of April 2024. 2 points are worth making here. Firstly, if the person is self-employed overseas, this period will vary according to the country the person is tax resident in. Secondly, the immigration rules can require the self-employed person to submit their self-assessment tax return period much earlier than what the UK tax rules do. Therefore, if you apply shortly after the 5th of April of any given year, even though HMRC will not require you to submit the self-assessment tax return, the immigration rules unfortunately do. The second step is to identify the gross taxable profits from the person's share of the business in this period, not including any deductible allowances, expenses, or liabilities which may be applied to the gross taxable profits to establish the final tax liability. The easiest way to do this will be to ask the self-employed person's accountant. If they do not have an accountant, you will likely need one to satisfy the immigration rules, depending on your circumstances. It will be this figure that is includable under Category F, if the application is evidenced accordingly. Self-employment income can also be included under Category G. The difference in calculation here is that under Category G, you must calculate the mean average of the 2 most recent full financial year figures. However, it is very rare for partners to rely on Category G, for good reason. Since Category G requires providing a lot more documentation, relying on Category G is only something that is seen as a last resort if the financial requirement is not met under Category F. Self-employment income as a sole trader, partner, or franchise can be combined with non-specified limited company employment income, other non-employment income under Category C, and pension income under Category E. However, when self-employment income is combined with one of these, the relevant financial period for the other sources of income normally changes to match the same financial period as the self-employment income, which is 6th of April to 5th of April for those self-employed in the UK. For example, the applicant wants to submit the application in June 2024. The applicant wants to combine their partner's non-specified limited company employment income with their partner's self-employment income as a sole trader in the UK. Normally, the relevant period for the employment income will be the 6 months before applying under Category A or up to the 12 months before applying under Category B. The amount of employment income includable will be the gross amount received during the 6th of April 2023 to 5th of April 2024 period. Self-employment income as a sole trader, partner, or franchise can also be combined with other self-employment as a sole trader, partner, or franchise if the relevant financial period is the same. Self-employment income under Category F cannot be combined with either cash savings or sources of income which are not a source of income when the application is submitted. So, for example, the applicant wants to submit the application in June 2024. They want to combine their partner's non-specified limited company employment income with their partner's self-employment income as a sole trader in the UK. If the employment income stopped becoming a source of income in May 2024, before the application is submitted, the employment income will not be able to be included towards the financial requirement. We discussed the amount of income that you'll need to satisfy the financial requirement, as well as all of the UK spouse visa requirements that you must meet in our detailed spouse visa requirements YouTube video. Also, if you found this video helpful, feel free to let us know in the YouTube comments by liking the video and by subscribing.